Thank you all for taking the time out of your busy schedules to join us today. I am Ken Tamagawa, CEO of SORACOM. Today, I will be presenting our financial results for the second quarter of the fiscal year ending March 2026. First, let me start with the executive summary. Our key performance metric, recurring revenue, recorded a strong 34.4% year-over-year increase, reaching 4.1 billion yen. Looking at the second quarter alone, it grew 49.3%, and our annual recurring revenue, ARR, surpassed 10 billion yen at the end of the quarter. Total revenue also showed solid growth, up 35.9% year-over-year to 498 billion yen. Our global revenue ratio remained on a strong upward trend at 44.7%. EBITDA came in at 449 million yen, representing a 2.4-fold increase year-over-year, with the EBITDA margin improving by 4.0 points to 9.0%. Operating profit tripled to 311 million yen, with the operating margin expanding by 3.4 points to 6.2%. Next, I'd like to highlight a few key points from these results. First, our comprehensive agreement with KDDI is progressing smoothly. Orders received under this agreement, including order backlog, have already reached 1.19 billion yen this term, surpassing last year's total performance. Second, SORACOM continues to advance its commitment to evolving into an after-AI organization, an organization where generative AI is embedded in everyday operations. The impact of this transformation is already visible, with the SG&A ratio improving by 9.2 points, from 55.8% in the same period last year to 46.6%. Finally, our new joint venture with Marubeni, Misora Connect, was successfully consolidated as a subsidiary on August 1st, and the PMI, post-merger integration, is progressing steadily as planned. That concludes the summary. Today's presentation will cover two topics: financial results for the second quarter of the fiscal year ending March 2026, and progress on our growth strategy, in that order. Let's start with the financial results for the second quarter of the fiscal year ending March 2026. Here, you can see the quarterly trends in recurring revenue and total revenue. The blue bars represent recurring revenue, which consists of our subscription-based income from IoT connectivity, AI, and cloud services. The grey bars show incremental revenue, which includes one-time sales such as IoT devices and software. We place great importance on growing our recurring revenue. In the second quarter, recurring revenue increased 49% year-over-year on a standalone quarterly basis, and its share of total revenue remained above 80%, showing a strong and stable structure. This significant growth was driven by strong performance in our existing businesses, particularly in global markets, as well as the consolidation of Misora Connect as a subsidiary in August. As a result, our ARR exceeded 10 billion yen as of the end of September. As for total revenue, in addition to the growth in recurring revenue, our incremental revenue also rose sharply, up 55% year-over-year, thanks to the earlier than expected recognition of sales under our comprehensive agreement with KDDI. Next, I'd like to explain our first half results in comparison with the same period last year. As mentioned earlier, recurring revenue grew 34.4% year-over-year, while total revenue increased 35.9%. Gross profit rose 22.7% year-over-year to 2.63 billion yen. The gross margin came in at 52.9%, down 5.7 points from the same period last year, mainly due to the consolidation of Misora Connect, which currently has a lower gross margin. Going forward, we aim to improve Misora Connect's profitability by gradually migrating to SORACOM's cloud-native mobile core software and by leveraging our global vendor network to optimize procurement costs. SG&A expenses increased 13.7% year-over-year to 2.32 billion yen. Although absolute SG&A expenses rose due to the new consolidation, we successfully contained the increase by utilizing generative AI to streamline operations. As a result, the SG&A ratio to net revenue improved by 9.2 points, from 55.8% to 46.6%. Thanks to these improvements, EBITDA grew 2.4 times year-over-year to 440 million yen, while operating income tripled to 310 million yen, delivering a strong increase in profitability. Next, let's take a look at the KPI for recurring revenue. Starting this quarter, the figures shown here include the entire SORACOM group, incorporating both Carriot and Misora Connect. Recurring revenue is calculated as the product of ARPA, average revenue per account, and the number of paying accounts. In the second quarter, ARPA increased 16% year-over-year to 857,000 yen, while the number of paying accounts grew 17% to 10,000 accounts. Even in our existing businesses, ARPA continued to grow steadily, driven by the ramp-up of several large-scale global projects. In addition, the new consolidation of Misora Connect contributed significantly to the increase in both ARPA and the number of paying accounts. Next, I'd like to share an update on our comprehensive agreement with KDDI, which has been a major initiative driving our business performance. Last fiscal year, KDDI synergy sales were concentrated in the fourth quarter. This year, under the framework of the comprehensive agreement, we are working to advance these projects earlier in the year to achieve more balanced growth across the quarters. On the left, you can see the quarterly trend of KDDI synergy sales. Cumulative sales through the second quarter reached 334 million yen, representing a 39% year-over-year increase. In addition, we have already received orders totaling 857 million yen for the second half, putting us well ahead of our full-year plan. While the business still shows a certain level of second-half concentration, as this is the first year under the new structure, we expect a much more even distribution of sales, not only in the first half, but also in the upcoming third quarter compared with last year. Going forward, we will continue to strengthen our collaboration with KDDI in 3 key focus areas: connected cars, OEM provision of cloud-native mobile core systems, and the integration of generative AI with IoT. On the cost side, we have successfully contained SG&A expenses through our ongoing evolution into an after-AI organization. Since the end of 2022, SORACOM has been making full use of generative AI across the entire company. With the emergence of this technology, we set a clear goal: to become an organization built for the post-generative AI era, and have been advancing initiatives under our after-AI organization vision. Specifically, we have been minimizing human resources to only what is truly necessary, while leveraging generative AI to boost productivity across existing businesses. The human resources saved through automation and efficiency are then reallocated to growth areas, enabling us to scale our business with minimal new hiring. As you can see in the middle graph, SG&A expenses increased in absolute terms due to the consolidation of Carriot and Misora Connect, but the SG&A ratio to net sales improved from 55.8% to 46.6%. At SORACOM, our leadership team, including myself and Yasukawa, CTO of SORACOM, has a strong background in advanced technologies. With an international, distributed organization operating across 3 global hubs, we are able to respond quickly and flexibly to industry trends. Going forward, we will continue to fully embrace generative AI to further enhance productivity and accelerate our transformation into a truly after-AI organization. Finally, let me share the progress toward our full-year forecast. As we adopt a range-based forecast for the fiscal year, I will explain the progress based on the midpoint of each range. As of the second quarter, our performance is tracking at a level that puts us within reach of the upper end of the forecast range. The progress rates are as follows: recurring revenue at 45.5%, net sales at 44.1%, gross profit at 44.3%, SG&A expenses at 44.1%, EBITDA at 39.6%, and operating income at 46.1%. Compared with the same period last year, both revenue and profit are progressing well ahead of schedule. The strong revenue performance was driven by steady growth in our existing businesses, particularly the early realization of KDDI synergy sales, as well as the consolidation of Misora Connect from August, which contributed 2 months of results. On the profit side, we also benefited from cost efficiencies achieved through the use of generative AI, which helped us significantly improve margins. In the second half, we already have order backlogs exceeding 857 million yen in KDDI synergy projects, and Misora Connect's full 6 months of revenue will be reflected in our consolidated results. Taking these factors into account, and to reiterate, we continue to operate at a level that keeps us within range of the upper end of our full-year forecast. That concludes the explanation of our financial results for the second quarter of the fiscal year ending March 2026. Next, let me explain the progress we've made on our growth strategy. Our growth strategy is being advanced under 3 key pillars. A. Global expansion. B. Strategic alliances and M&A. C. Initiatives combining generative AI and IoT. It's important to note that the power of generative AI is not limited to the third pillar alone. It is accelerating our entire business, enhancing the growth of our recurring revenue foundation, supporting global expansion, and strengthening strategic partnerships. We refer to this comprehensive vision, which fuses IoT and AI to drive exponential growth, as our real-world AI superconnector strategy. Here, I'd like to share a few recent customer updates. We are seeing growing adoption of SORACOM's platform across social and industrial infrastructure sectors. On the left are examples from Japan. Xeon Corporation has adopted SORACOM for remote monitoring and maintenance of its factory equipment. Our platform serves as their company-wide IoT foundation for collecting and managing factory data, a model we believe many other manufacturers can also benefit from. In the energy sector, Osaki Electric uses SORACOM for its remote meter reading service, Rakuraku Kenshin, and Nubiden has adopted our platform for its EV charging service, WeCharge. Looking at our global business, in the United States, Mori Corporation, a developer of IoT devices for commercial vehicle and construction equipment telematics, has chosen SORACOM as their connectivity platform. As these projects continue to scale, our recurring revenue will grow even further. We will continue to expand our customer base and make SORACOM's platform available to a wider range of industries worldwide. Now, let's take a closer look at the progress of our growth strategy, starting with global expansion. One of SORACOM's key strengths is that our platform is fully aligned with global standards, both in connectivity and in the cloud. This allows customers around the world to easily adopt and deploy our services. Today, we operate under a 3-hub structure in Japan, the United States, and the United Kingdom, where local teams directly engage with and support local customers. In the second quarter, our global sales reached 2.22 billion yen, accounting for 44.7% of total revenue. As we've reported in previous quarters, large-scale customers such as Bus Patrol and Hilton in the US and Solitech in Europe continue to expand their deployments. These projects remain in the growth phase, and with new customers being added steadily, we expect continued strong growth in our global business going forward. In particular, our US business has shown remarkable growth recently, and this momentum is being driven by our partner strategy in the US market. We have established a strong distribution network, forming strategic partnerships with multiple distributors that help us win large-scale projects. For example, the customer I mentioned earlier, Mori Corporation, was acquired through one of these distributor partnerships. Most recently, we were honored to receive the Top New Supplier 2025 award from Intelisys, one of the leading technology service distributors in the United States. This award recognizes the rapid growth we achieved in a short period of time. On the right, you can see the revenue trend of our US business. Our CAGR for the first half reached an impressive 73%, clearly demonstrating our strong growth trajectory in the market. Going forward, we will continue to focus on becoming a global leader in AI and IoT, building on the momentum we've created through our global expansion. The second pillar of our growth strategy is strategic alliances. We are working closely with KDDI across multiple areas, including the connected car business, which remains one of Japan's core industrial strengths. Together with KDDI, as well as Suzuki, who is also one of our investors, we are steadily advancing a number of joint initiatives in this field. Most notably, development of our new connectivity platform for connected cars, called Irrigate, is progressing smoothly. Irrigate was showcased at several major global events, including MWC in March, SORACOM Discovery in July, and most recently at the AECC International Conference in November, where it received very positive feedback. Irrigate is designed to support a wide range of services and applications throughout the long life cycle of vehicles, including ownership changes and usage across different regions, while ensuring stable and secure connectivity over the long term. SORACOM contributes to this platform by providing our cloud-native mobile core technology, which we have developed and refined over many years. We are also advancing multiple collaborations with Suzuki. One highlight is the Mitora concept, an electric mobility unit that supports robotic movement. It was recently exhibited at the Japan Mobility Show 2025, where Suzuki's president mentioned SORACOM as a key partner during the company's press briefing. Going forward, we will continue to play a vital role in supporting the global expansion of Japan's connected car technology as a Japan-born global IoT platform provider. The third pillar of our growth strategy is the real-world AI superconnector, a new strategy we announced in July. SORACOM is evolving into a real-world AI superconnector, connecting everything in both the physical and digital worlds to AI and empowering our customers to create a better future. The physical world refers to IoT devices, such as vehicles, appliances, and industrial equipment that generate real-world data. The digital world includes enterprise data such as sales, production, and HR data. By connecting all of these to AI, we enable our customers to unlock new value from their data. In simple terms, SORACOM helps companies connect everything to AI. To realize this vision, we will continue to develop new AI and IoT services accelerating our transformation into a real-world AI superconnector. By advancing our real-world AI superconnector strategy, we can accelerate our reach across the entire IoT market. For example, in the hardware domain, our SORACOM smart camera serves as the eyes of generative AI, enabling real-time data capture and analysis from the physical world. In the service domain, we offer SORACOM Genie Build, a platform that helps customers develop and operate IoT applications efficiently with AI-powered support. And in the software domain, we provide Wisora, a generative AI chatbot service, along with SORACOM Flux, which allows users to build IoT applications easily using generative AI. Through these solutions, SORACOM is expanding beyond our traditional strength in connectivity, addressing the entire IoT ecosystem, from hardware and software to services, and accelerating innovation across all layers of the market. We are also seeing a growing number of real-world use cases for our new AI and IoT services. On the left, you can see an example using our SORACOM smart camera together with SORACOM Flux, which enables easy development of IoT applications with generative AI. This case comes from Griffy, a company providing DX solutions for construction sites. They use SORACOM and SORACOM Flux to monitor snow accumulation at construction sites and to automatically display and notify when snow removal is required, helping improve safety and efficiency during winter operations. On the right, you can see a case using Wisora, our AI chatbot service, adopted by Nature, a company offering smart home control solutions. During peak seasons, Nature used to experience up to 5 times more customer inquiries. With the introduction of Wisora, they were able to flatten demand by providing 24-hour automated FAQ support, allowing their staff to focus on more complex customer requests. As a result, they achieved a significant improvement in user experience, and the solution has been highly evaluated by the customer. In addition, we have recently launched a new AI and IoT service called SORACOM AI. SORACOM is our cloud-based smart camera that allows users to easily collect real-world images and videos in the cloud. With the new SORACOM AI feature, users can now analyze the collected images simply by entering a natural language prompt. For example, count the number of apples on the store shelf by color. Even without any engineering expertise, users can harness the power of generative AI directly from a web interface, just by typing a simple instruction. We believe this represents another important step forward in our mission of democratizing technology, a principle we have upheld since SORACOM's founding. So far, I've discussed our strategies for revenue growth. Finally, I'd like to explain our focus on profitable growth, a key indicator that combines the growth rate of recurring revenue and our EBITDA margin. At SORACOM, we have made profitable growth one of our core management principles, as we aim to achieve sustainable expansion by balancing revenue growth with profitability. In the second quarter, our profitable growth reached 43.4%, exceeding our target of 40% for the first time. Recurring revenue grew at a rate in the 30% range, including contributions from inorganic growth, while EBITDA improved to 9% in the first half, supported by cost efficiencies through generative AI and other operational improvements. We expect further improvement in the second half, and for the full year, we are confident that profitable growth will surpass our 40% target as planned. Going forward, we will continue to pursue a balance between growth and profitability, maintaining a disciplined approach to both investment and execution as we drive our business forward. Finally, let me conclude with a brief summary of today's presentation. In the second quarter, SORACOM achieved significant increases in both revenue and profit. Our existing businesses, particularly in global markets, continue to drive strong growth, while the consolidation of Misora Connect also made a substantial contribution to our overall performance. In addition, our KDDI synergy sales progressed at a pace exceeding last year's results, further reinforcing the visibility of achieving our full-year targets. This year marks the 10th anniversary of SORACOM's founding. As we enter this milestone year, we have launched a new strategy, the Real-World AI Superconnector, and are accelerating the rollout and adoption of new AI and IoT services. At the same time, our evolution into an after-AI organization, where a small and agile team leverages AI to drive large-scale impact, is already producing tangible results in our financial performance. Looking ahead to the next decade, we will continue to lead the industry through innovation, transforming ourselves to stay at the forefront of the AI-driven era. Guided by our founding philosophy of democratizing technology, we will continue to build sustainable, long-term growth, and we sincerely appreciate your continued support. That concludes my presentation. Thank you very much for your attention.